Hi and welcome to Westpac's end of day report for Tuesday the 30th of August. European sessions started off fairly choppy today. Obviously Europe had a very positive trading day on Monday, however the UK markets were closed. Today we saw that positive sentiment start off initially, but it sort of ebbed away a bit, particularly following the release of some further business surveys for August. Business Climate Index, it fell very sharply. Another measure of European economic confidence, it fell sharply as well. There were some updates on the UK economy related to the household sector, where credit there, in terms of both personal credit and mortgage credit, outstandings grew very slowly in the latest figures for July. But it wasn't really stuff that pushed the market around a hell of a lot. The FTSE benefited, of course, from not trading yesterday. It was up for 2% or so for most of the trading session, reflecting catch-up from yesterday's gains, and also some stories where one of the banks was lifting its recommendations in terms of analyst recommendations, that is, for some of the big UK banks. The big miners, Rio and BHP, they performed very well because of stronger commodity prices in the last day or so. But the other European markets were a little bit more lacklustre, following media reports that there was still potentially problems in some of the banks in Europe. That's a story that's going to continue to bubble along for some time to come. US markets opened. We initially had some house price figures which showed a very small fall in the latest month, these are for June this year. But then an hour later we had consumer confidence figures for the month of August. We saw a huge drop there. Confidence fell 15 points to 44.5. It's a very steep drop by the standards of that index. Although something you typically do see when you following a 15% drop in the equity market. It was somewhat bizarre, of course. Equity markets then fell away in response to the fall in consumer confidence, which was largely due to the fall in equity markets over the previous month. But that renewed softness in equity markets didn't persist, and as I speak, and it's currently just after 5:30 in London, so lunchtime in the US, the Dow's actually back to pretty much unchanged on the day. And we've got in Europe the French market up 0.2%, the German market down around 0.5%, and the FTSE closed up 2.7%. But again, that reflects the very strong performance on markets yesterday when the FTSE was closed. What seems to have given a bit of a boost to the market in the last hour or two has been some comments from Fed officials. We saw Evans from the Chicago Fed say he's probably the most ardent supporter of aggressive further easing measures. He was one of the voters at the FOMC meeting on the August 9th. But also the Minneapolis Fed's Kokolakota, he said, he was one of the dissenters. He preferred not to change the language from extended period to keeping policy close to zero for almost 2 years. He didn't support that at the time, but what he said was that he would abide by that decision on August 9, and when thinking about his future decisions. Now, the way I interpret that is he's basically saying that he's not going to argue against maintaining that new language, the new 2-year commitment at future meetings. So today you had one of the real doves saying he wants further easing, and you had one of the hawks saying he's actually not going to vote as hawkishly at future meetings, if my interpretation is correct. Anyway, markets certainly seem to have liked that, so the losses that we saw in mid-session in the US have been worked back to pretty much unchanged at the moment. In other markets, I mentioned that commodities were stronger. Crude oil's up 1.7% at the moment, $88.74 a barrel. We've got gold up 1.7% as well at $1,821 an ounce, and copper prices are up 1.4% today as well. There's talk of a strike in I think it's in one of the Indonesian copper mines, and so it's like a supply side sort of price pressure coming through there. The Aussie dollar's at 1.069 against the US dollar, pretty much at its highs for the day, reflecting that renewed positive sentiment starting to creep back into equity markets around the London close US lunchtime. In terms of Australian data coming up, we've got the Reserve Bank's latest credit figures for July. We know that housing and business credit has been very weak. We expect that to remain the case. That's one of the reasons why we're arguing at Westpac that monetary policy in Australia is probably tighter than the Reserve Bank has acknowledged up until now. I mean, if policy was only just a little bit above neutral in terms of the degree of tightness, then you'd have a bit more credit growth coming through, but we just simply aren't seeing it. So that update's going to be important. We also get some private sector house price numbers out today, and then over the rest of the week we're going to see an increasing focus on the US labour market, with the private sector measure of payrolls from ADP coming out Wednesday night your time, the latest weekly figures on Thursday for unemployment insurance claims, and then the payrolls report on Friday, where at Westpac we're looking for a 20,000 increase in payroll employment in the month of August, which is a pretty weak outcome. Not the weakest of the forecasts out there that I've seen so far, but certainly well below the consensus expectation. And I might talk a bit more about that later this week. But until then, I'll see you tomorrow.